today will be a shorter lecture. I'm not doing 4 hours today, so it will be the first lecture, so it will be about 2 hours. And then from next week onwards, we will start go into the main topics for the course, right? Okay. So feel free to stop me at any time and just let me know if there's anything. So can everyone see the screen that I'm sharing?
Yes, yes.
Okay, right. Thank you. So first, what I'll do is I'll give you an overview of the course, and then we will go to the introductory lecture. Okay. So some house rules. Generally, I share this when I do online courses because, as you know, with COVID, doing online courses have totally changed the modus of actually teaching, and we need to have different types of participation. So this course is digital payments and fintech innovation. So it's a very practical course. It's also a very interactive course. So you need to respond, and you need to share with me what your level of knowledge is. And if you do that, everyone will benefit. And otherwise, be rather flat because it's because it's a new thing. It really depends on where you come from, like what is your background, what is your level of knowledge. It's not a purely theoretical course, so there's a lot of practical application. So therefore, the more experience you bring in, the more you try to apply what we learn, it will be more effective. And so digital payments, I presume all of you are bankers. Let's go to some class introductions. So there's 3 of you. Do you mind giving me a quick introduction of who you are and where you're attached to and what you're doing at the moment? Isivara, would you like to start? No? Who would like to start? So, Dyaparan, would you like to give me a short introduction of who you are? No, there's no response. So I will just presume that I'm teaching all sort of mid-level bankers and take it from there. Okay, so we will be meeting for 10 weeks. And as I said, just feel free to interact, because otherwise you and whoever watches this course, it's the quality of it comes when you participate. So you're already keeping your microphones on mute, so that's nothing to worry about. Just raise your hand, or feel free to just interrupt me at any time. So when we're doing the 3-hour courses, we'll generally take about 1.5 hours, breaks after about 1.5 hours, but today will be a shorter course. So yes, we will begin. So the overview of the course is basically provide an understanding of digital payments and settlement systems and fintech innovations. Now, fintech innovations is the latest thing that is happening. It's been, the word is now about, it's almost about 7 years old actually, 7, 8 years old. And fintech stands for financial technology. Digital payments is really, the importance of digital payments is really increasing, not only in Sri Lanka but all over the world, because the of the and everyone having mobile phones and PCs have enabled the payment service providers, that is generally banks, to access more customers, more retail level. And there are more technology. Technology itself has advanced. Digital technology itself has advanced. It's not the digital, even though banks have core banking systems and banks are highly digitalized, the architectures, the capabilities of more modern technology is far more versatile than what was there before. So there's a lot of room for innovation. So because of that, payments and fintech innovation has become very, very important. During this course, the aim of this course is to really help you be able to explain what payments and settlements is in an economy and how digitalization of payments is affecting the economy, right? And fintech is also is a main thing, and fintech mainly addressed payments. So you have fintech in every aspect of banking. So in every aspect of financial services, credit, insurance, budgeting, you name it, for regulatory purposes. But fintech really started with payments. So there's a lot of innovation in payments using fintech. And at the end of the course, you should be able to describe how payment systems evolved from a non-digital to digitalized payments, and really the effect it has on economies. And then the structure of Sri Lanka's national payment is very, very important for you as you proceed in your career, as you make decisions, investment decisions, marketing decisions. When you come to the central bank for proposals, approvals, really understanding the structure is very, very important. The current national and international framework governing payment systems, because payment systems is really not only a national domestic close thing. It is very international, and it is governed not only by national laws, it's also governed by international regulations. So, and also there's a lot of foreign payments. So we need to understand that this is a huge area that we are studying. And though it seems very operational, it has a much bigger impact on the economy. And you should be able to really apply your knowledge to your experience, and as you go forward and understand what fintech development and fintech innovation is, because going forward, it's very, very important to understand what digital payments are, but also what fintech is, because fintech is, while the main stay is payments, it is far wider. So really understanding that will help you much more in the future. So the course structure, we will focus on, the first will be on digital payments, and the second will be on fintech innovation. For digital payments, I will first introduce what digital payments is. Some of you may already be involved in payments, or if you are working at a bank, then definitely what you're doing is some payments. So you have some transaction related work. Then the evolution of payment instruments and technologies. Then we have the institutional framework. So that is also as important. It's not only instruments and technology, it's also the frameworks, the institutional structures, because payments is a very, very complex area. And if you're working in payments, you will know the complexity of it. The legal framework. So institutions are the bodies, the firms, the regulators, all those structures that are involved. The legal framework is also very important because payments is highly regulated. Sorry. Then we will go into the more operational level. What are payments? What are the payment systems in Sri Lanka? And then what are the settlement mechanisms in Sri Lanka? It's not only in Sri Lanka, we will also be taking an international look, because Sri Lanka's payments and settlement systems are very comparable internationally, because we have very advanced payments and settlement systems in Sri Lanka. So this will not only be Sri Lanka specific. We will be drawing from international experiences as well. And it's very important to look at this slightly internationally, because we have to see where the world goes, and trying to standardize and compete with other countries is very, very important. And then fintech innovation. I will introduce, because this is probably one of the first courses in this area, I will introduce fintech and then go into what fintech innovations are, and the country experiences, and how you can promote fintech even as a bank, as a regulator, as a country, and then how fintechs are regulated, right? So we will go to the first lecture, which is Introduction to Payments and Settlements. So let's start with the basics. I always want to start with the basics, because very often we want to study very big things, and we go to the theories and the sort of more complex applications. But in that process, I find that people forget why we are learning those, or what exactly we are doing it for. And when you sort of forget the basics and why you're doing it, it loses purpose, and we find very detached implementations or innovations or products that are detached from the real purposes of the market, the customers, the real the for the benefit of the economy, and they become redundant. So it's really important to always keep in mind why we are doing it. So I'm just going to go back to the basics, and this might sometimes you might wonder why we are doing it, but you will understand as we go why is it important to start from the very basic point and then develop as the course goes, because we will, towards the end, we are going to be connecting back to the basics, right? So what are the different types of payment systems that we see, right? So in a house, let's start from the smallest unit of the economy. In a house, what are the different payment types that we see? So we have various payments. We have capital payments, we have current payments, utilities, entertainment. There are all these expenses are in the form of payments, right? So if you look at it from a value perspective, if you look at utility bill versus the petrol versus the gym subscription versus, let's say, buying a house. So we already, within the house itself, we have a spectrum of both very retail payments, very micro valued small payments like food. And then we have large value payments, critical payments, like buying the house or buying the car, right? Or a hospital bill. right? So within the smallest unit of the economy itself, there is a very wide spectrum of payments, and these payments through the different payment methods, the way we pay these expenses will change. We are not going to use, let's say, cash or a check or a credit card to pay for all of these, right? So the real purpose of this course is how we decide what, where, which payment method, settlement method we are going to use, and the implications of those on the economy, and the importance of having multiple options, right? And why increasingly every day there are new types of payment options coming up, the reasons for this, the demand for different types of payments, right? Next, we have a company, a firm. So if you take a firm, what are the common business payments, right? You work at banks, so you know this, your salaries, travel expenses, office supplies, right? Subscriptions, advertising. So again, there's so many different types of payments, and this is what really makes up the company, right? If it is stagnant, then nothing happens. So these different types and levels and frequencies of payments is really what keep businesses going. And then in a bank, right? A bank, what sort of payments do banks facilitate, right? So, and then we find it's much bigger than what the firm is doing. You have trading, you have money exchange, you also have the small and micro level payments like the ATMs, right? You can go to the counter and get cash, you can go to the ATM and get cash. And you can now banks facilitate online banking, right? There's government payments. So the the type of payments now from the household to the company to what the banks, the holders of public funds, facilitate is much wider. You have money market transactions, right, which completely is sometimes outside, actually it's completely outside the household level expenses, right? Then you have business to business payments, you have government payments. So the complexity is increasing, the type of payments, the nature, the frequency, the legal uh, complexity of payments are increasing and increasing, right? And then you have foreign payments. Now banks facilitate imports and exports, right? So now payments are going out. And then finally, what are the different types of payments in an economy, right? So all those payments, now the bank was the center of it. We found that banks are the ones facilitating most of it. So the banks hold really the pot of money, they hold the public funds. Almost like Sri Lanka, if you take, for example, we are highly banked. So that means almost everyone has a bank account. That means to some level, people's income are coming into the formal banking sector. So from there, it's from there that all the payments go out, and all these systems are connected to the banking system. So that allows the economy to really function. So we will see now all those payments that we discussed earlier are falling into the bigger economic picture. Now, this is a very basic flow of the economy, right? And you have probably already learned this in your A levels, undergraduate, graduate level, wherever you go, it all starts with this. And I am coming to this basic point to show that, to remind us that this entire flow of the economy runs on payments. At every single point here, there is a payment, right? Purchases, taxes, transfers, um, uh, imports, exports, profits, interest, rent, everything is a payment. So remember, the very wide gamut that we are dealing with in this subject, and how we try to simplify this complexity so that this economic flow happens as efficiently as possible, right? So because this is really the reason why payment systems are there, right? To facilitate the smooth functioning of the economy, right? So what is the role of the payments and settlement systems in the economy? So it is, as we described, it is the foundational pillar of the economy, right? Everything runs on a payment, right? And these payments, and this is why I went from household level to the macroeconomic level. They range from very micro level, small, buying a toffee, to a very large payment like money market transactions, securities transactions, uh, FDI flows, right? So, and all of that cumulatively becomes the economy and the GDP, right? So, how do we get every day? There are so many payments. So, how do we manage this, right? What we are seeing is that as economies grow, they move away from cash. But we also find that cash is quite sticky, and there is a lot of cash around as well. But digital payments enable the speed that an economy needs as it grows. Then the next is digital payment methods are facilitated through payment systems as well as settlement systems. So these are two different things. Just because there's a payment system doesn't mean that it will settle. So we will, in the next slides, we will discuss what payments and settlements are. And together, payments and settlements create the payment infrastructure. So as I said, the vital functioning of the payment system is the efficient functioning of the payment system is vital for the smooth functioning of the economy. And as it increases, as the economy goes, as the demand for more payments, more non-cash payments increase, and we have to develop and connect more and more systems, programs, softwares to this main infrastructure. The complexity increases, and then the risks increase, the risks of the systems failing. And this could affect financial system stability. And so while the payment is very important for the economy, the stability of the payment and settlement systems is very, very important for financial system stability. And I believe you must have already learned what financial system stability is, which is vital for the efficient functioning of the economy. So some key concepts that we need to know before we move on. So what is a payment? So a payment is very simply a payer's transfer of a monetary claim to a party on a party acceptable, right, to the payee. Now, what does that mean, right? So there is a monetary claim, and it says the Bank of International Settlements describes this as typically claims take the form of cash or deposit balances held at financial institutions or at a central bank. So what they're basically saying is if anyone gives money or something that represents money to another person, that is a payment. Now, something for you to discuss and think about is, do payments have to be made using cash or deposit balances? I mean, we take it for granted that payments need to have cash or deposit balances, that is balances at the banks. But do they? Can there be payments of other sorts? Can someone give you, let's say, books as payments, or their gratitude as payments? So think critically, because this concept of what do we have to give for something to become a payment will become important as we look at new innovations of payments, right? Like alternative currencies. They're called currencies, but whether are they actual currencies? So this concept of do payments always have to be made using cash, and deposit balance is very, very important. Would anyone like to join in to the discussion? So this is something very important to keep in mind. Just keep this in the back of your head when you're thinking about payments. Do we always need cash or deposit balances, right? You all are bankers, so just keep this in mind. This is very important for you. So we have the barter system, right? So we always learn that it's a chronological process, right? From barter, then there was money, and then the money was like gold or little stones. You know, we always saying this. You know, in the caves, the people were using shells to as currency, and then came the electronic payment systems, and that is the accepted form of the evolution of an economy and money. So barter is a very important starting point, right? We often quickly move away from barter, and but this is the base. So keeping these, having a good understanding of the basis, the basics, and the foundations is very important, because digitalization is really taking away a lot of the issues that older technologies like paper used to face, right? Like the issues of distance, the issue of time, the issue of speed. So when that is happening, it's very important, right? Now, if you notice, like a very simple example, right? In the 80s, in the 90s and early 2000s, there are a lot of, there was a lot of processed food, like factory made food, like biscuits and noodles and all of that. And then now we increasingly find that people, and people used to buy it and eat it, and there were health concerns and all of that. But now we find with the increase of supply chains, people are cooking a lot on their own. And there are a lot of restaurants that are giving healthy food, artisan food, that is handmade food. So we seem to be going back to basics. And really, what is this thing that is facilitating going back to basics? It is the supply chain. It is to good food produce. It is access to different types of flour, rice, good vegetables that people couldn't access so easily before. So well, quality people can cook at home. So with the advancement of technology in any field, we find a sense of people going back to basics, and also people are saving more time because of technology. They don't need as much time to do the work that they used to do. So we find a going back to basics, and this is why I'm starting this course from the basic point, because we will find that we are going back to the basic points, but using technology, right? The foundations, we're going back to the first principles. So a barter system is a system of exchange where there is no money, right? So that is the direct peer-to-peer exchange, right? So there is no middle payment, there is no cash, there is no deposit balance being used, but there is value being exchanged, right? There is a payment in the sense you are paying with something that you have produced. There is no medium of exchange, right? It's direct. So real-time peer-to-peer exchange, right? So is barter good? So, I mean, is it good? So we have finality. Immediately the exchange is over. You don't need to go and, so if you, let's say you sold something for money, then you have to go and buy that other thing that you bartered again, right? But here, let's say you actually wanted the milk and the plumbing, then you have already gotten what you wanted, right? So it's done. So in that level, there is a meeting of needs. But the other problem is if you are a plumber, you need to, then the most commonly quoted issue is if you're a plumber, then you need to find people who need plumbing. If you have only milk, you need to find people who want milk. So that is the inefficiency of the barter system, right? But it's also the same if you take currencies, right? When you go into the international markets, you need to find people who want to purchase in rupees or purchase in dollars, right? So that's why, I mean, when you have weaker currencies, you have this issue, right? And again, this meeting of the medium of exchange, we will discuss this much later when we are talking about things like Bitcoin, right? The acceptability of currency, right? If you go back to the definition, a monetary claim on a party acceptable to the payment, to the payee. So the payee must accept this, right? So this is very important. So and then the next question is the barter system over? Have we really, is it this chronological process of um, uh, barter, coins, cash, internet? Is it that? What happens if there's hyperinflation, right? If money has lost its value. This happened in the Second World War, actually, when people started using cigarettes as the cash, as the medium of exchange. So we need to remember that barter system is something that you can always go back to, right? If people lose their faith in money, their faith in the banking system, then people can always go back to barter system, because at the end of the day, what money is doing is it is facilitating exchange, right? If it fails to address the inefficiencies of the barter system, like being able to mark value, right? Or to store the value, right? To create a standardized value system where you say a milk bottle is this much and plumbing is this much. If it fails to do that, right, or people stop accepting that, then people can always go back to the barter system, right? So remember that money is an intermediary point, right? We have to remember this, very important, because unless we understand the qualities of money and what the purposes of payments and settlements, what the purposes of banks are, we could lose track of where we are going as we advance. So we have the barter system, we have next the cash system, right? Now, as I said, a payment does not require a reciprocal movement of goods or services. It could be a gift, donation, right? And also there is not necessarily always cash involved. But when there is cash involved, what are the benefits of cash? We have no third party, right? So it's also peer-to-peer, like the barter system, it's peer-to-peer, right? You directly give money. The plumber doesn't need to sell his plumbing. He can directly give money to buy the milk, right? And then the person who buys the milk, who sells the milk, can go and get her plumbing services from another plumber if she likes. Then there's immediate finality of the payment, right? That's very, very important. And then risks of theft, damages, germs, that's all there, right? So here we are. Payer, cash, pay, simple. This is an option, right? So this doesn't, this is just the part that we are studying. But this part, as we discussed earlier, is quite complex. So the benefits, there's immediate finality, there's no explicit costs, right? There are like the central bank spends a lot of money on providing sufficient cash to the economy. But for the user, for the public, unless now, of course, banks charge from ATMs, but ideally, I mean, that is another debate. But it doesn't have a cost. So if you accept cash, there is no cost involved, right? If you use cash, there is cost involved at the moment. But if you accept cash, there is no cost involved. There are no intermediaries. You don't have to go through anyone. You don't need a bank. You don't need a payment service provider, nothing. Speed. That's questionable. It really depends. Sometimes, I mean, people say cash is slow and inefficient. Sometimes if you go to a supermarket, it's faster to give. If you have the right amount of cash, it's actually faster to give cash. But as the amount increases, then the complications start to arise. If like the value increases, or if the value is very sort of, let's say, with cents and down to units, then it becomes inefficient again. And then the shortcomings. So non-face-to-face transactions, that are transactions done over a distance, becomes a little problematic. So, so an interesting thing is, so Sri Lanka has cash on delivery, right? This is a fairly sort of old system, and when we go for payments related discussions, digital payment related discussions, people in other countries, especially developed countries, find it really sort of amazing that we have this cash on delivery mechanism, because in those countries they use credit cards or digital wallets to pay, and the payment is immediate. And this concept of cash on delivery is very, very unique to them. But that is a way that the distance issue, that people sort of innovate to solve the distance issue. Then there's the issue of hygiene, as we discussed, and with COVID, it has become even more pronounced. Then change, as I said, if it's down to the value, it's difficult to, you might end up paying more or receiving less. Safety, some people actually think that it's safer to use cash. Some people think it's risky to use cash because someone could steal it from your wallet. So there are always two sides to these stories. And what I really want y'all to, I don't want to push any ideas here, and I really want you to sort of critically, openly think what these are and analyze them, and go forward to the process of digitalization, because it's not useful as bankers, as managers, as people in policy, to just take things as they are, right? It's very, because if you just take things as they are, you will find that the environment changing, and you're not understanding what the environment is, why the environment is changing like that, because you have sort of these fixed ideas that digital payments are the safest, or cash is really risky, or digital payments is fastest. So it's really important to understand that context matters. Costs are different to each person. And when we understand these things, we will understand why cash persists, yet why digital payments thrive as well. So how this complex interactions take place. So we have cash, right? Then we have this word called payment instrument. So payment instrument is defined as any instrument enabling the holder or user to transfer funds. So when we sorry, um, when we say payment instrument, it is something that is representing cash, right? So we have cash. So some people actually categorize cash as a payment instrument, but a payment instrument is something that really represents cash, right? So and payment instruments are generally regulated, right? You can't use anything as a payment instrument because it is representing cash that is held elsewhere, right? It's sort of like an interface, right? So in Sri Lanka and in the world, we non-cash payments are facilitated through both large value and retail value, but we find the payment instruments really at the retail level, right? So the oldest payment instrument that we all know is the check, and the check is a very old payment instrument, and it's also very versatile. It's a very good payment instrument. So there is a drive towards reducing checks due to the processing costs, but it is the only negotiable payment instrument that we have. So we will discuss payment instruments in detail in the next lectures. And so keep in mind that this is always, I'm really sort of, we have two tensions here. We have the past and the future, and we have the present in the middle. And we will find that we are making a circle, right? And we will find that things that we thought were obsolete are making a comeback, but in a new way, right? But the concept is there. The concept has not left. The concept is gaining traction because of technology. Then we have postal instruments. So interestingly, Sri Lanka still has postal instruments, and if you go to the payments bulletin, that it's used. Then we have payment cards, with credit cards, debit cards, stored value cards. Then another payment instrument is the mobile phone itself, because we have mobile money, right? Mcash, Easy Cash, and banks can also use their mobile phones for mobile banking, daily banking, and now mobile apps, right? So through the internet also we can access funds, and then now we have QR codes. Now, what are all these payment instruments really doing, right? What are they really doing? What they're doing is they are accessing our deposits in the banks mainly, like apart from postal instruments and Mcash, where we go and give our money that we probably held somewhere else. They're alternative instruments. The rest of them, what they're really doing is they're accessing our banks. So basically, they are instruments that the banks have issued to customers to say, here you can use this, kind of like a key to your store of money that we keep safely for you, right? So that is the function of a payment instrument. And when someone takes a check to a bank, they're basically saying, look here, Jane gave me this and asked you to give me some of her money that that you are holding on her behalf. So that is the function of a payment instrument, and that is very, very important, because we find that payment instruments are changing with digitalization, because the way that the other party can go and represent to the bank saying, excuse me, Jane gave me this document to ask you to give me some of her money, that statement is getting digitalized, and the speed the authentications, all those are changing because of digitalization. So now we go into the next one. So this is, we had cash, right? Now we are going into non-cash. So now we are adding more people to the payment process, right? So what are non-cash payments? Basically, payments that don't use cash but payment instruments, right? So you can have paper-based, which is checks, and electronic payments. Then the moment you have a non-cash, right, you have an intermediary coming in. You have a third party, right? So barter and cash did not have a third party. And the moment you have non-cash, we have third parties getting involved in our transactions, right? But third parties are facilitating our transactions. It can be banks, it can be payment service providers, the clearing and the settlement networks, app providers, whoever, someone is facilitating the payment for us, right? And that is called intermediation, which we will learn in the next lecture, right? So settlement of the payment can happen in many ways. There is time, that is one of the most important things about settlement. And then you have the payee and the payer. They don't need to meet face to face, right? So cash, barter, you need to meet generally. But here you don't necessarily have to meet. The third party can facilitate, right? So this can address the security issues that cash has, right? So in a stylized payment of the non-cash transactions, we have the banks. So you have the payer, and then the bank, and then the payee's bank, right? So in the middle part, right, this process is where a lot of the complexity takes place. Of course, from this point onwards, the institutional framework, the legal framework, all these start becoming relevant, right? The moment a payment starts, from this point onwards, it goes, right? So we keep having the more intermediaries that we name, card schemes, e-money, payment app providers, they keep getting added at some place between the payer and the payee, right? So layers keep getting added in order to increase the efficiency, lower costs, for various purposes. We will have third parties joining in, right? So some concepts that we need to know as we go forward. So payment initiation. Payment initiation, the word is sort of self-explanatory, but the word itself came up through the introduction of the Payments and Settlements Directive, Payment Services Directive of the EU, where they introduced a category called Payment Initiation Services. And so payment initiation services are, so payment initiation is where a customer initiates the payment, but now we have companies, firms that provide initiation services. So mainly through apps, things like PayPal, their payment initiation services. They just help the customer initiate in a payment and access the card or the bank directly through technology, right? And then we have authorization. Now, authorization is another very important thing for non-cash payments, which is when we all know when a payment starts, we quickly get the reply whether we can go ahead with the payment. And that is where the bank authorizes the payment to go ahead, right? Ensuring that there is security of the payment, that there is money to be paid, right? So that's a very, very important step. And then we have clearing. Now, clearing is a very, very it's a very operational exercise, but it increases the efficiency of all the transactions being processed in the economy, right? So it basically, clearing is a process of netting where it allows banks to not make the payment immediately, right? Where the payment is actually made a little later on a net basis generally, right? And to process clearing, where all the banks come together and they net out each other's values, to process clearing, we have clearing houses, right? So Sri Lanka Clear is the clearing house in Sri Lanka. So we have the alternate situation of when is clearing not needed, right? When do we go real time? So when we go to that, when we go to discuss the types of clearing systems, we will discuss this in detail. Then we have settlement, right? So as I said, payments and settlements are two different things. You can pay, but you can settle completely differently. So clearing and clearing, the net balances of clearing, or directly through real-time gross settlement, the money has to actually move from one bank to the other into the customer's account, right? And this is when the settlement happens, right? And there are different arrangements for settlement. So we will discuss these things like finality of the settlement, deferred settlement. We will discuss this in in future lectures. So what is a payment system? A payment system is all this that we discussed, right? It's not just the IT system. It is not just the process of a customer coming and initiating payment and getting settled. A payment, what we mean by payment system is the instruments, the procedures, the rules, everything becomes a part of those courses called payment and systems. We're not just talking about IT systems, they're talking about. So the reason I'm asking you this is because this is the introductory lecture and this really sets the tone. I introduced some key concepts, and the purpose is to really sort of gauge where we need to go. And you really need, I keep stressing on this, and I would like if more of your colleagues join as well, is that this is a very practical course, right? And it will, if you and all of you are bankers, and I think most of you are mid-level bankers. This is a very, very important sphere because banks are investing a lot in this, and a lot of the roadmaps of banks are focused on digital payments and fintech innovation. So it's really, really important to understand why we are doing this, and also this will have a lot of practical application. So if you participate, this will be better for you. Of course, I will continue teaching. That's not a problem. But for you to reap the best benefits, right, in terms of your career, it's much better for you to participate and bring your experience and questions along and get clarity rather than only listening. Right. So I will go to the final point of the discussion. Right. So the major trends that we are seeing in payments, right? And this is what I'm saying, that payments is really changing in the world. your banks are changing, the structures of your banks are changing. There are new jobs. 10 years ago, we might not have people like head of digital or a head of innovation or people like that. But now we are having posts like that, CEO level, C-level posts. With those names, and that is because of this huge change that digitization is doing to payments, mainly payments, and through fintech innovation, right? So the trends that we are seeing, and it's really important, and these trends are what will be discussed in the subsequent lectures, which is that the payments value chain is witnessing a lot of front-end innovation. That's why we have Lanka QR, we have mobile apps. A lot of them are in the front end. And because people have mobile phones and PCs, right? So people already have the infrastructure. All this time, the customer didn't have an infrastructure, and banks couldn't, sometimes if you remember in the early 2000s, banks were giving companies, firms, uh, some tablets to make payments. When they go to customers, they could put their bank account details and make finish a deal. But that is very expensive, and a bank can't give every customer the technology. And so the technology that banks were giving customers were the cards, right? So the cards were sort of a cost-effective technology. It had the magnetic strip, it had the chip. So with that very small technology, customers were able to access the bank account digitally. But now they don't need the card necessarily, because now customers have invested in technology. They have the phone, they have their PCs. So because they have this technology, they can very easily connect to the banking systems. So because of that, there's a lot of front-end innovation. The front end is the bank, is the customer end, right? And you will, as bankers, you know that banks are discouraging customers from coming to the counters. They're asking them to use apps and all of that. So then we have the regulator, the central bank. We are fostering a lot of innovation, because there is a lot of benefit in all this innovation, especially for financial inclusion, because we have the technology to access a wider a scope and area of the population. So this is very, very important, right? So the regulator is really, really fostering innovation, and we are doing a lot of changes. We have a regulatory sandbox. Lanka QR was facilitated by the central bank. We are looking at blockchain technology. So we're doing a lot of sort of cutting edge work because we see the benefit of all these innovations. Payment processing is undergoing transformation, building next generation infrastructure. So that's another very, very important thing. Now we, along with a lot of countries that you saw in the map, right, have RTGS systems. That means those are huge investments. But now most of those countries are revamping their RTGS system, right? Even we are revamping our RTGS system. England, and the architectures are changing, right? They're becoming more innovation friendly. So we are going into next generation infrastructure. So it's not only the front end, even the back end is changing. So there's a lot of change going on, and these are very high value investments, right? Implementation of real-time payments is accelerating globally, right? So again, so RTGS is real-time, and as I said when we were discussing the map, is that it's not only critical large value payments, it's also retail value payments, and all the world is moving. And Sri Lanka actually has an edge, because we had invested in our RTGS and we have CEFs, and based on CEFs we have Lanka QR and mobile apps that can do real-time transfers. So we are actually ahead of that curve. And then we find that banks and non-banks are focusing on new technologies such as blockchain. So they are going in for next, even at the bank level. So it's not only the infrastructure that is going to next level, the banks themselves. So even micro level innovations are using new technologies. And the use of data. Now, data is a very, very important thing, right? We so far in this discussion, we have only been talking about money, right? But data, customer data, we know this. We know how important data is, because now everyone is using Facebook, and we know Facebook somehow manages to find the right advertisement to show us. Every website we go, they're asking, is it okay to collect your data? And then, on our phones, we are getting random SMSs. That is what everyone is processing, our personal data. So data driven solutions are increasing, right? So it's not just facilitating a payment, they are trying to give us more value through the data, like what sort of transactions, budgeting. So lot of solutions coming from data, and there's a lot law related to data protection as well, and we will be discussing that as well. There's increased global e-commerce and cross-border payments, right? So that's why we can't study this in isolation. There is a lot happening globally, right? And international payment systems are connected. Then international digital wallets, like we allow Alipay in Sri Lanka. So like that, there's a lot of cross-border transactions and e-commerce taking place globally. And then there's increased investment in security and authentication methods to avoid fraud and data breaches. So it's not just the system. These systems have to be very, very advanced, because as much as economies are growing, crime is also growing. There's money laundering, there's fraud. And also data breaches. Sorry, it's not data, it's data breaches. So because data itself is very, very valuable. Because data is valuable, accessing that data itself, even without stealing that money, can be very extremely valuable. And then finally, we see that developing countries, and I told this in the last slide, which is that developing countries are witnessing a lot of disruptive innovation, right, and leapfrogging. So when developed countries are still using credit cards, and we saw that US and European countries, they are still heavy on credit cards, and the revenue comes from credit cards. Developing countries are not wasting time with credit cards. They're directly using technology to access bank accounts and provide real-time payment facilities for their public. So, and we are also, so Sri Lanka is in an interesting place, because our payment systems emulate that of an advanced economy. So we have the credit card systems in place, we have the RTGSs in place. So our trajectory is kind of mixed. It's not a developing country. So a lot of people will put Sri Lanka as a developing country, because we are, in terms of normal categorization, but in terms of payments, we are actually more similar to developed countries. So we face similar issues that developed countries face, and similar opportunities that developed countries have. And our real issue is payment systems are really advanced, but the customer behavior, the public, the economic activity are not fully matching. And that now with mobile phones and PCs, we can actually correct that mismatch. Now we have a better opportunity. So these are the areas, sort of very broadly, right? The next you will see these trends being shown in terms of payments and settlements. So you will get a knowledge of what exactly the status quo is and how things are changing, right? In the next lectures. So these major trends are the things that if you actually look at this, you will see this happening in your environment. And we will discuss why, sort of theoretically also, why these things happen, right? That's really important. So that is all for this first lecture. And as I said, I wanted to keep this an introductory lecture to understand what dynamics of the class is, what your requirements are. And again, I invite you to So again, I invite you to respond. Are there any questions or anything that someone would like to ask? Okay, so we will end today's lectures, and next Sunday we will have 4 hours of lectures, and then there will be breaks every sort of 1.5 hours. And in the next lecture, in the next sessions, we will be discussing how the payment instruments and the technologies are digitalizing and transforming. So for each, we will discuss each instrument, right? And the changes that are taking place there, and how the environment is changing, as well as we will be talking about new currencies like Bitcoin, and how they are affecting the economies. And not only Sri Lankan economies, but globally, how countries are getting affected by these changes, right? So if there are no questions, we will end this meeting. Thank you for those who joined. Again, if you have any questions, feel free to, you can email me if you have any questions. If you want to bring any questions for the next session, that is also very welcome. And again, I cannot emphasize this enough. Just listening to the presentation and participating will have a very different impact. So please engage, because you all are mid-level managers with a lot of experience. And so make the best of this course, because it is very relevant to what is the changes that are ongoing at your individual banks as well. Right. So thank you very much, and have a good day and a good week. Yes, I will see you next Sunday. Thank you.